Hey everybody, welcome back. 4,400 on the S&P 500. Feels like Groundhog Day the past 5 or 6 days. And we should talk about this and why it's continuing in here. But more importantly, I think we should focus on this whole sector in here. In other words, if we just take a look at this sector for a second and how we're kind of wedged in here and why we've been staying this way for some time, I think it's pretty important to just kind of cover this for a second. So if you just take a look from the top of this box over to here, and what we're going to do is just enclose this for 1 second. So you can see all of this in here. You can see how you've kind of been in this range between 42 to 46. And there's a reason I want to walk through this. So between this range, we can see that we really have not gone anywhere for a period of time. If we take the height to the low, you can see about an 8% drop from this range. During this time, if you take a look at the 10-year, you can see how the 10-year has consistently moved up. Now, the 10-year is the guide by which we look at earnings yield. Earnings yield is if you take all of the companies that are in the S&P, you divide the stocks by the amount of earnings, you're going to get a percentage. Right now, that is around a little over 4%. As the 10-year goes higher and higher, it gets harder to justify the S&P going higher. This is what's happening to us. I'm going to get into it on Saturday in greater detail when I can really dig into it and explain the calculation, what exactly is going on. But this is one of the things that's keeping the S&P from really going anywhere. And this is why you're going to start seeing certain stocks outperforming, i.e. the Magnificent Seven everyone keeps talking about. We're going to explain why something like that can continue. But I just wanted to explain this, and if there's an interest in it, comment below. And I'll cover it this Saturday. As everybody is aware, Saturdays are a bigger video. We're getting through the week, and what a week it's been so far. We have a lot to go over. But if you just look here, we can see these DTLs and how they're just setting up downward trend lines. They're not really able to break. If we took a second, we just look at this one and clone it for a second and just drop our line straight down. We could see that range right in here. Matter of fact, the one thing that we were doing was just even dropping it from here over and just watching how it undercut recently. And then that undercut, how we just rallied right back through it. So this is nothing new. Now the question is, why are we here again? Well, what's fascinating to me is the amount of news that you had today that should have taken the market down and did nothing. Did absolutely nothing. And I think that's pretty staggering. So we're just going to start with the basics. To begin with, you have a 12 that is pointing up. You are back again above the 22. I think that's really important for everybody here. One thing I want to do is just go through the demarcation line so that you get this. 55 is institutional sponsorship. Do I have institutions that are interested? I use a 55. Most people use a 50. I would suggest you use what you're comfortable with. You can see the doji that formed today. Dojis are signs of what? Uncertainty and also change in trend. So they're definitely something that we want to pay attention to. So we have the 55. If we put the 22 in right now and take the 55 out, 22 is who's in charge, bulls or bears. That's my demarcation line. That's how I refer to it. Most people use a 20. I use a 22. You should use what you like. So you see here, over. Couldn't hold. Here we go again. But this is where it gets interesting for me on the 22. Look where the low of the day was on the futures market. Right on the 22. That to me starts telling me that what is happening is that we're starting to set up to possibly push. Now, you never know. We're in a news-driven cycle. 1 minute things are great. The next minute they're not great. The next minute there's more going on with the war. So these are all things that we have to take into account. Quite frankly, as I've always say, no one really knows what's going to happen. We just try to assess probabilities based upon past performance of something. I mean, that's really all we ever do. And the sooner you realize that, the better. So if you see the 12 right here, the 12 determines whether or not even swing trade should even be tried, in my opinion. So if I crack here on the 12, I become more interested in swing trades to the downside, i.e. shorting. If I'm above here, I become more interested in swing trades to the upside. If I'm above the 12 and below the 22, my swing trades will have a shorter time period. If I'm above the 22 and above the 55, my swing trades will have a much longer time period. That's how I view the world. Now, something else that I should probably just bring up that you'll find very helpful, and we're going to cover RSI ad nauseum tonight, showing the trade that we absolutely questioned in today and how we utilized it. I'm going to show the live trade in a moment here. But if you take a look right here, what's happening? We're over the 50. So if I ever get a 12, let me just point this out for a second so that you get this, and we'll just drop it all back in real quick. But if I ever get a situation like this where I have the 55, the 22, the 12 all above, and my RSI is above 50, I'm holding positions for a much longer period of time. You will find that optimally for you as a trader. If you are above the 200, the 55, the 22, and the 12, forget all your other lines, and your RSI is above 50, that's optimal. It really doesn't get any better. You can just take what I just said to you, you can go and back test it, and you'll see that that has the strongest performance in the S&P, period. It's not even a question. Some people might say, well, I would rather use RSI this way, or I'd rather use MACD this way. Use what works for you. I always say that. Not everything I do is optimal for the way that you want to trade. You should take the pieces that work for you and go from there. So we're seeing that the RSI is flipping back above 50. We didn't have to do that today. We had some really bad news today for tech, and we're going to go through that. But if we take a look at the NASDAQ in here, let's clean up my 1,000 lines, and let's get rid of everything for a moment and just talk about this. You have a hammer bar. Now, you were just told that the semiconductor industry is going to have a limiting ability on who they're selling to. This is from the New York Times, and this is today. U.S. has tightened its restrictions. China's access to advanced chips for artificial intelligence. The further limits on shipments could cripple Beijing's AI ambition and dampen revenues for U.S. chip makers, analysts say. I'll point out a couple pieces here. The Biden administration Tuesday announced additional limits of advanced semiconductors by American firms, shoring up restrictions issued last October. So they're shoring up the loopholes is what they're doing essentially. The rule appears most likely to halt most shipments of advanced semiconductors from the U.S. to Chinese data centers, which would use them to produce models capable of AI. More U.S. companies seeking China advanced chips, machinery to make use of them will be required to notify the government of their plans to obtain a special license. And they are doing this to prevent the risk that U.S. chips travel to the U.S. Third countries will also require makers to license chips of dozens of other countries. So they're trying to get rid of all the workarounds that are involved. Now, this is obviously bad for tech. And what did tech do? What did the NASDAQ do today? It went down a whopping 32 basis points. So even after everything, even after the shake, what happened today? This is really where it gets very important for us to understand why we have demarcation lines. Number one, the RSI is above 50. We already know that. Let's go and take a look and just take off the 12 and let's take off the 22 for a second. Here's the 55. Now this could be better. Of course, 1, 2, breaks, 1, 2, back over. It's not ideal, but it's very important for us to realize that we did get back over today, and we did close back over the 55. We didn't have to do that. You have a lot of earnings this evening. ASML is going to come out with earnings while the market's closed. You have a lot of earnings tomorrow. You had a lot of earnings today. We did not have to do this on the NASDAQ, and we did it. So that's what we have to take into account. So we understand that institutional sponsorship in the NASDAQ makes sense. Now, if we go back to what I said about earnings yield, it makes sense that the NASDAQ is going to outperform the S&P. And again, just comment on that below and I'll cover it on Saturday if there's enough interest. The 12, what happened here? Right to the 12. Do I want to swing trade this market? Yes. Do I have institutional sponsorship? Yes. See how all this works? You could actually do something like make a checklist. I think I did a video on that at one point, how to create a checklist. Who's in charge, the bulls or the bears? The bulls are in charge. We know we're above the 200. The bulls have been in charge of this market for how long? And we can see that every dip is bought to some extent, not all, right? We all know that. Not every dip was bought today. And we are above the 50. This is an optimal setup for me. What I don't like is I don't like that I'm not making higher highs. But at the same time, if I just drop my little demarcation line right here or support line, and then I look at the RSI, well, I have a positive divergence. So I have to look at that now. People will say positive divergences, they don't really work. I'm reminded of someone's comment where they said if they worked as much as gravity, then everyone would believe in them almost as reliable. And then we have this graph from Steve, so you don't have to see me draw my childlike handwriting anymore. So thank you, Steve. Now, why this is important. This is important because it's something that I use and I used it trading today, and I'm going to walk through that in a second here on a trade so that this is something that you can utilize yourself. So we know where we are, and then we start drilling through this. Now, for those that are new, all these videos are connected. What was the number one thing that I kept mentioning yesterday? What flipped? We had one more sector that did what today? 55. You had one more sector that closed over the 55. We closed over the 12, we closed over the 22, and we closed over the 55. Now, if you take a look here, you closed over it just by a hair today as well, but you are still over the 55 on XLK. This is 2 days in a row. We still are above the 50 for now, but the fact that you're above the 55 made it one of four major indexes that put it there. Let's drop the 55 back in so you can see that pretty clearly. Again, this is mimicking what? It's mimicking the NASDAQ. Having a hard time with that word tonight. And why am I showing this? Because when we fell apart today, what bounced? We saw Apple bounce. Could it get over the 55? No, it rejected. Complete Matumbo, right? We see that. We all see it. How about Microsoft? Let's get rid of everything here. How about Microsoft? So what happened today? So if you knew that, and you knew that was one of the strongest sectors, look how easy this trade was for people today. When this came down and the market collapsed, this was one of the easiest trades because you knew you had the right sector. Remember, everything that I do, and you can trade however you like, but everything that I do is top down. What does that mean? That means index. It means sector. It means stock. So if I'm going to go through the index and go, the NASDAQ is above, tech is above, XLK is above, Microsoft's above, this becomes something of interest. All right. So that's how you would sort through, and that's how you could use that data, and anyone can do this. Now, why am I pointing this out right now? Why is this important? It's important for a couple of reasons. The most important reason is that we held today. We didn't have to hold today, but we did. You're not making higher highs. You still are making some lower highs and lower lows. It's not ideal, it's not optimal, and you have a ton of earnings this week. I would be watching names like Microsoft tomorrow and seeing how they act. You had a ton of earnings today, again, like Bank of America, and we could see how that acted. They came out and everything was across the board was better. Goldman, everything was better. If they're going to hold, they're going to hold. If they're not going to hold, they're not going to hold. Morgan Stanley, what was appealing about this is everyone getting ahead of Morgan, but what was really appealing about this is that not that these stocks are going to rally up, but if the XLF, meaning the financial sector, can find some footing in here, let's get rid of my line, that would be extremely helpful if we could find some footing. And it's starting to look like, well, maybe we are finding some footing, and maybe that is something that we should be paying attention to. So now let's just start getting into the nitty gritty of this and say, okay, how does any of this benefit us? Well, if we take a look at the SOX, we're below the 55, and we rejected here and we rejected here. So it's not optimal. That was the sector today that was the most aggressive, and that was the one that made the most sense to play. That said, if you go back when we talked about XLC the other day, and we talked about this on Saturday and said, look for these sectors that are what? Above the 55. Google closed green on the day. Google made a higher high. How many stocks made a higher high today? Maybe that's something to think about tomorrow if we pull back again. Meta made what? A higher high. How many names made a higher high today? You could literally go through the list of tech and go and sort through it. It's not many. And it's all these XLC names. And again, sector, stock. And then you can see from here where the money flow is going and how they responded today. As a matter of fact, if you look at Meta, which most people didn't today, and just drill into this, all you did, gap down, go sideways, Wick City, flip, and then go. That was it all day. It's the easiest trade in the world. Never came back down. Never, where most of these names did come back down today, and we're going to get into that. So for me, the money was really made in understanding that NVIDIA is already pretty much sold out, right? So to me, NVIDIA, when I say that is, they're already sold out of their product for a period of time. I don't know the exact period of time, but the idea that this was going to be the be-all, end-all issue, and the stock still is down 4.5%, this presented a huge opportunity. And I'm just going to walk through the trade, what I saw today, and how we did it. And then from there, I'm actually going to show the live trade so that you can watch it yourself and see how it was done. It's very easy when I point out the timestamps and say we did this here, we did that there. Watching it live unfold as what we were trying to do, I think that that's most helpful. And I would watch this a couple times if you're interested in trading, but specifically if you're interested in how to determine when there's a bottom and then how to handle the trade. But I do want to point out and be Captain Obvious here, we didn't break above the 55. I have a doji, and that's a long-legged doji. They are signs of uncertainty. That should not make you feel warm and fuzzy. That's not the close that I wanted on the day, and that's why you have stops and you have processes to sell. It's not what I want to see. You have ASML tonight again, and ASML, and I thought this was fascinating. If you come to this demarcation line right here, the support level, I thought this was fascinating how we got to that today, opened right there, and then just ripped all day long. 18 points. I also am going to put my tinfoil hat on for a second and say I find it really interesting that they decided to do this on the sanctions right in the middle of earnings season, right before ASML came out with earnings. Something for the tinfoil hat crowd. Just something to think about there. And then, lo and behold, what did you have? You had buyers all day long, and we'll get into what names they were buying, which is kind of odd if you really think about it. Why would they be buying those names? So now let's clean this up. All right, so here's ASML, and I just want to point this out in the 15-minute chart before we even begin with NVIDIA. 1, 2, 3. half hour. Okay, who sells in the first half hour? You're going to hear me say this live in a minute. Retail sells in the first half hour. Okay, so retail panics, gets all scared, sells to institutions. Retail, they take their stock from you and they rip it up. All right, this is like one playbook 101. They know that they'll panic off the first half hour. And here's the panic. They rip it and then they go. It's every single time that they do this. It's the first half hour. And you can see exactly how we ended, and then look at how you traded right into the close. I think this is an important distinction for how they now have a $15 or $18 cushion going into. I think that's a very important distinction and something you should think about if you're trying to trade into earnings and try to understand what names they're trying to get in ahead of earnings. I always think you should look at this kind of stuff, and you should definitely be looking at the market on close data at the end of the day. So they come out with this news on NVIDIA. No one likes the news, clearly. And you can even see this early on. We were live for the morning when we do the pre-market live when this came out. Let's get rid of all of this for a second and just look at price. And let's leave the pre and the post in. So we were talking while this was happening, and you can just see level after level. And you just start breaking down, and you can actually see when the news hits. And there's your demarcation line right there. And as always with any news event, you always just want to mark those levels and see how it goes. That first bar, and just use that first bar as like, hey, how is this going? Like, what exactly is happening? And you can see how you fought that, and then you just gave up the good fight, broke that pendant, and then it was just a disaster from there. Now, one of the things for me that was important is you always want to mark these pre and post levels so you can see how you battle them later in the day. And you can see very clearly right here how you kept hitting, and then what did you do? You formed a doji. Dojis are signs of uncertainty, forms another doji. And then what happened? Then we start to break down. Now, once we start to break down, that's it. And you'll hear me say that when I'm telling people if they want to take the short side, that's fine. I had zero interest in that trade. It did not work for me. I was looking long term because that's where the real money was going to be made. The puts at this point were just so inflated. There was a ton of risk. You could have made money, but it was really hard because they were just jacking up the IV, the implied volatility. So here you go, and you start to roll again, and then we start to develop this little pattern here. Now, what I like to do when I explain these is I like to show the timestamps that actually take place in the community, because what this allows me to do, to me, it's just absolute, it's timestamps. So there's no way that you can really say that we didn't do it, for one. And two, I always film when I trade, so it's there as well. So here's the time. John will put in all the alerts that go out there, and you can see this. And I'm saying I'm buying NVIDIA right here. And you can see the 954, and then you can see that we're buying the calls, the 425s, we're paying $10. It's an option along. If you want to play alert along, caution, and then you can start seeing very clearly, I don't have the other timestamp set up yet, that we're pulling it in, and we're pulling out some money as it goes up. You'll hear this live in a second. I want you to actually listen to what we're doing. Why are we doing this here? You're going to hear it live, but I'm going to leave all those demarcation lines in. And I'm going to be really clear about this. I did not have volume up. I was not looking at volume. It was not of interest to me. We already know volume is through the roof. We already know this. Okay? We already know that volume's through the roof. You see that little undercut right there of that bar right there? Okay, that's a flush. All right, this bar up over 50% of that red bar is a piercing pattern. This is at the bottom of a chart. Has the potential to be at the bottom of a chart. You could count them off 1, 2, 3. There's something to that, sure. But for me, see where you are right here, where you're basically at a 3 or a 4 on RSI, it's not sustainable. No matter what anybody says about RSI, this is not a sustainable level for RSI. It does not mean that the stock is automatically going to go up. Clearly, that was not the case here. 435 to 425, you have to learn how to read it. Now, what starts to happen is the divergence. We've gone through these several times, and you're going to see this live in a moment. But you can see that divergence right there. And that doesn't mean that you execute on this. This means, hey, take note, something's setting up. You'll see this in the index and the sector at the same time. Once you got this piercing pattern, that was it. It was game on, and it was time to put the trade on. And we put the trade on right here, and we also bought the 425s at 10 and change. Now, while this was going on, I wanted to scale into two other names. You can see this, the timestamp's 10:01. I wanted to scale into the SOXL, and I wanted to scale into AVGO, and that's what I was doing the entire time. We were at people that were looking at Tesla. I just wanted to call out the 248. That's not an alert. During the trading, if I see something, I'll call it out. I did not do this. People in the room will act off if I call it an observation. They were looking at this. So I just wanted to call out that it did hold that level. For our intensive purposes of this, just disregard. AVGO calls are $3. AT is not selling. at that price. Of course, he wasn't happy about it. So I had some calls I held overnight. This is a really important distinction. I really wanted to go through this. So I bought calls the night before on AVGO, and I walked into a bombshell. Okay. You need to just remember this one statement. You need to detach each trade from itself. So one trade does not make another trade work, right? You don't sell something or hope that you're going to hold something because of something else. This did not work. Move on with your life. It's really that simple. Okay. You just have to learn how to let go and detach. One trade, one gain is not going to make you. One loss is not going to make you. It's really that simple. It's simple. It's not easy. Believe me. NVIDIA, we were up $8. You can start seeing around 10.01. Do whatever you want, pull something out, and you just see that we just start running. And again, we'll show it live in a second here. The video calls are up 50%, pull something out. So what you're doing here, what your job as a trader is as this is going higher, your job is to pull money out, not say we're going to go back, we're going to do this, we're going to do that. Now, once that's done, you can start playing the game of what if? What if we get to here? How do we hedge the position? Because now the position to some extent has changed, hasn't it? And once that change takes place, you can start reevaluating the position. So for me, 10 minutes later, we start looking SMCI will be the next one. You know how that did. We'll look at that. SOXL, all of a sudden, is hitting high of the day. By the time that this happens and people are looking for this and they're waiting for the 9 to flip or they're waiting for it to get above their VWAP, I'm already in. By the time you're waiting for this, I'm selling to you. If you were buying for the VWAP flip or the 9 EMA, I'm selling into those. Right? There's a very distinct advantage to the way that these RSI trades work when something is blowing up, if you know how to identify them. You identify the opportunity, and then you look for a trigger. This was a glaring trigger to me for a couple different reasons. Number one is the piercing pattern. Number two is the failure, the undercut. There's a bunch. I won't get into all of it now, it's for time's sake. And then I start just trimming some of the SOXL that were up, and I start trading around the position. NVIDIA 5, once this bar forms, if it cracks, we'll probably lock in some and rolls from here. So I'm talking about how this is starting to form on a 5-minute. You'll see that live in a second. Now, I want to point this out. 10:19, right after 10:01, I said SOX, might be time to add. So you saw where I was just trimming, and then it confirms, and I add to the trade. And these are just other things. Boom, hits high of the day, start trimming again. NVIDIA long, we're up 10. I may try marrying some puts to it, but the puts were too expensive. This is what I'm talking about. When you have implied volatility like this, you need to take the other side of the trade. So if you're looking at this trade and you're like, oh, it's going to keep dropping, and you'll say, oh, I made money on my puts. You didn't make anywhere near what you could if you took the other side of the trade because the implied volatility was kicking to the downside because they knew that that's where retail was going to be. And they knew they could take advantage of people that way. That's why as soon as it moved a little bit, your puts imploded. For those people that stayed in puts today, and then you're just seeing that 10, 15 minutes later, I'm just pulling money out over and over again. And we're watching. And then that wraps into this. Now, 11:30, I'm adding more to that AVGO trade, which actually turned into a fairly decent success. NVIDIA options, we were up 100% at that point, and we just moved the stop to 75. Those $10 options become 25 at one point today. And then we were just, move the stop up. You're just sequentially moving the stop up, trailing stop. NVIDIA up 20 on the day, and then we were up so much we just moved the stock up and give it a wide berth on the rest, and then you just see that hey, I'm getting out. So I sold 100% of the second add into the rip. There was a rip there. It was like 892 or something. And then we just moved the stop up to 100% at one point because NVIDIA started getting goofy. But it's really important to get this. This whole thing was thought out. Instead of panicking, instead of saying I'm having a bad day because the AVGO did not work, I can't believe I bought those overnight. Instead of all that, I have a methodical process. The process is executed. And that's how you make money. You have to detach from it. Let me walk you through it here because it's really easy to back. Monday morning quarterbacking is very easy when you look at it from this way, is the way I want to say it. But to watch it live, you can actually see how the trade unfolded.
What's that bounce out there? I just don't know when. I think it's going to be these 425s or 10. You're at 10 on those. Look at that spread too. And you don't want anybody in those. See if that holds for a second. I bought some. Let's see what happens here. I bought some NVIDIA. I bought a bunch of calls, to the 425 calls at $10. You can put that all out there, John. You need to be really quick if you're trading with me here, guys. Like super quick to enter these and not be playing games because this can get uglier. They're 11. I pulled something out of them. I put $1 out. I still have a bunch of them, but I'm pulling stuff out. Take something out of the stock if you want. I mean, if it's going to roll, it's going to roll. It is what it is. It's gotten to the point to me where it's just silly, but we'll see. You can always get sillier, but it'd also go back to 440 and I can make a killing here. I can get a nice push. I'd love to pull out more and then just use the low of the day and then just have a free trade. If I can see 12, I can get to that and then just have a free trade on and just leave it on all day. And then I can see what happens. Pulled out more of those calls up to have about half of them left. I want to to push. I don't know that I'm going to get it. I have stock. I've not done anything with that either. It's all from this little move right here. That was the biggest green bar we had since this started, and this was oversold, and it was a positive divergence. So that's why I did it. So you're up a couple bucks on the stock. Take something off if you're concerned. There's nothing wrong with that. There's no right answer here today. Right now I'm getting dojis off a control bar that just broke down. It's not ideal. I do like how the calls are going up even though the stock's not. That usually means the stock's about to move. The calls are actually moving. If you still ever see calls move before the stock moves, that means that the stock's getting ready to move. It has to, because they have to delta hedge their position. I did really nothing with the stock here, down here, okay? And I've sold enough of those calls that I have a free trade, meaning that if it breaks here, I have a free trade. So now I'm just leaving it alone. I don't care if it goes, maybe it goes to 20. I have no idea. So now it's 240, up 25% on those, but I pulled enough out to catch this off the bottom and then sit with it. And what if I can get a real position off, right? Like I just did, and then I can marry some puts to it and just sit with it and then hold it into ASML's earnings, Lamb's earnings. That's a completely different trade. They're at 13 now. There's no reason for me to do anything else with those options. You can if you want. You're up 30%. But I'm doing nothing right now. You have to realize, guys, this is not going to be a straight line today. Not even close to a straight line. All right. All you did off the first half hour was what? Who sells off the first half hour? Okay. So we had retail panic and dump all their stock. Who do you think was down there buying? SMCI, to me, if you get over the open, I'm getting back in. I already have a positive divergence on it. You see that here, right? You already see the positive divergence. Okay. That's when people tell you that they don't believe in positive divergences. When people say that, show them this chart, and then you can go show them that live trade that we just did that has you up about what from here now? $7 on stock and 40% on puts. All right. Patience, guys. Let me be, you can do whatever you want with that. You're up $8 now on the video. And where are you on those options? 50%. Let everybody else panic. All right. You're up $5 on those options now, and you're up $8 on stock. You are over here on the zero line. You have to watch the zero line now and watch how this acts. You're up 50% on those puts. If you want to pull something out, do it. You're up $8 on stock. You want to pull something out, do it. Right? Because there's your hammer, right? And you're not even over. You're not even done oversold yet on this. But above BWAP, okay, but you're rejecting up here and you're rejecting all this in here. So these sellers are still here. That's what this is telling you. Those options are what? 15? 2 now. I mean, it hasn't given you a reason to sell it yet, has it? You know, maybe just use something like that low now. If it breaks there, see how we act through that 9. 870. Looks to me like you're going to, from here on the stock, you're up significantly. So at this point, let's start mapping this out a little bit because now you have a different kind of trade. So this is your breakout bar. So I'm going to use this right here as a stop pretty much on a lot of stuff. See that breakout bar right there? So you're in there and now you're up $12 from this point. All right. What you do with this is up to you now. What I'm going to simply suggest is this was your breakout bar, okay? Take what you want out of it. You can always roll again, guys. You have to understand that, but you're getting to that opening price. All right, the opening price here, mark that exact, just show you. All right, that's 439.81 is right there, okay? 439.81. You have to get through that, right? Like this thing, boom, going to be a monster. And you see that bar right there? The minute I go under it, I'm probably going to close a chunk, if not all of it. I don't think I'm going to close all the stock, but I'm going to close a lot. I'm just going to lock it all in. And I'm going to sell chunk of stock and a chunk of the options, move the rest of the options to 50% gain. Very little to do here. And you may have a day trade by the end of the day that you're up $20 on a portion.
So I would rather walk the trades through that way into these videos. I think that's way more helpful. I'll probably clip these out so that you can review them, but I think it's way more helpful for you to review them in this than me to create a separate video. That way you can come up with a game plan tomorrow. Now, what I would focus on with NVIDIA is how do we react to the ASML? Let's clean all this off. You're going to have to see how you react to ASML tomorrow. There's a couple things here I'm not crazy about. Number one, we closed below the 50 on the RSI. Probably a given with the pressure that we had today, candidly. But we have this open and closed doji where we're sitting right there. And that's what we have to pay attention to, and that's what we have to watch. How is that going to go tomorrow? I got to be honest, I don't have a clue. I really don't. Now, if I just look at that, I'm going to tell you right now, it might be an inside bar and then you might roll. If I go back and just look at my demarcation lines, I am not crazy about any of this. I'm not crazy that I couldn't get back above the 55 and it was rejected. That means institutional support at the end of the day was kind of like, it's no longer a swing trade. I'm below the 12 and I'm fighting for the bulls to still be in charge. That's how I look at the world. It makes my life very easy. You should use what you want to. I use a 55 and it rejected. I can like the stock. I could want to be in the stock. I have to respect what's happening. This is what's happening and that's what I have to trade. Now, you have ASML tomorrow that's going to set the tone. That's up 18. Somebody wanted to get in before earnings, didn't they? Closed at the high of the day. We're expecting a lot of bad news out of ASML because Taiwan Semi told them to delay. I don't know how much of that is factored in. You know, when it comes to earnings, it's like life's like a box of chocolates. You just don't know what you're going to get. So you have things like that you have to worry about. Then you have Lamb research tomorrow. Look at Lamb. You cannot get above that 55. And it's not like some of them are not above those levels, and that's important. KLAC had no problem getting above that level today. That had institutional support, but Lamb doesn't, and Lamb has earnings tomorrow. I think that's a very important distinction. Take a look at Taiwan Semi. Taiwan Semi couldn't get above its 55. Guess who has earnings? Not so much Wednesday night, but Thursday morning when the U.S. market is closed because it's based in Asia. So that's kind of an interesting distinction that's going on now. Maybe that changes, and maybe that's something we have to look at. But you're seeing clear winners today, guys. So look at this SMCI, and this is something that we own. But if you look at this, I have 1, 2, 3, 4, 5, 6, 7 tests of that 55. And I held it. I use a 12, a 22, and a 55. You should use what makes you comfortable. So I looked this out, and I was joking with them today. Anytime they asked about another stock, I just kept saying, is it a semiconductor? Because if not, I didn't really want to hear it today. There were some other names out there we should cover that are really kind of fascinating. But if you take a look at this is definitely something we have to pay attention to. Now, BJ's, I get a downgrade out of Goldman, and the stock hits its lower channel, bounces off this level on what? Really good retail sales, flips its 55 and gets institutional sponsorship. That's really interesting. If I get a failed H here on a Goldman downgrade and institutions have an interest, I might need to watch this tomorrow, and I would suggest that you watch this as well. This was a really interesting move. BNTX, I have a short position in. To me, this looks like the slow grind down will continue. The most interesting trade out of all the trades I saw today was this CHH. They came out and said, we're going to buy this company. We're going to buy Wyndham. And they said, we're in the market to buy Wyndham. They come out and the deal's 49.5. They give them 49.5 in cash, 0.32 in stock. So the deal's like $87. And okay, so you're like, okay, well, the acquirer company's going to drop. Well, Wyndham says, Matumbo's them and says, no, we don't like that. Rejection. This hardly moves. Wyndham hardly drops from this. CHH continues to drop. So that can only mean one thing to me, that they expect Choice to up their offer. That's the only reason why this could be happening, is because the risk and ARB people think that Choice has to do more. And if they have to do more, then it's going to be more dilutive to them. And that's why Wyndham didn't drop. Because this is something that if you reject an offer and they don't think that you're going to come back to the table, well, why did this do two things? Number one, why didn't it just go back to its home? Right? Why didn't it just come back down here? I always think of Happy Gilmore when I say that. But why didn't I come back down here? Right? It doesn't make any sense. And then why did I hold the 55? And who buys at the 55? Institutions. That's it.